Hello, ladies and gentlemen. I am JC Parets. I am the founder of Trend Labs, and we are here to celebrate an amazing tradition in the world of nerdy mathematicians, and that is International Fibonacci Day, which is November the 23rd, 1123, right? So the first few integers there of the Fibonacci sequence, and it is a special occasion. And how can we have a celebration about Fibonacci and Fibonacci Day without the man, Mr. James Bartelloni, Mr. Barts Charts himself? So I called him up. I said, Bart, we got to talk about Fibonacci. We got to tell the folks, what even is this? What is the golden ratio? Why does it matter? And then why is it so helpful in the market? So ladies and gentlemen, without any further ado, may I present you with Mr. James Bartelloni, Mr. Barts Charts. How are you, sir?
I'm awesome, JC, and thanks, dude. You're my homeboy, so it's Fibonacci, right? He is my homeboy, right?
So Bart's shirt is Fibonacci is my homeboy t-shirt. I see you, dog. I see you there.
Amen. And
you know, playing a little along myself to the
on.
golden ratio, you know.
Yeah. So I don't even know where we start, JC.
Start there. Let's start with that. What the hell even is this, right? Why are you wearing a t-shirt of one Leonardo Fibonacci de Pisa? Why am I wearing a t-shirt that says 1.618? Like, why? Why are we doing that? Why are we get so excited? Why are we celebrating here November 23rd?
Well, first off, the chart's being shown, right?
No, nothing. Show the different features here.
Let's just throw that first chart up there, and I think people get a clue. You know, why? Well, we got to start with the brain. I know it's going to be quick, I promise, but our brains are inherently lazy, right? They just are. And the second thing is they don't like surprise. So if you were the grand architect of this entire game in this third dimension, which, oh, by the way, we are, how would you want to feed information into this, quantum computer projection device called the brain? Because it doesn't want to work hard and it's lazy. Well, you'd probably send in fractals of the same pattern over and over again. That pattern happens to be based on this dude from Italy called Fibonacci, who basically, I mean, everybody can Google it. You'll probably get 15 million, hits in 0.23 seconds off of Google.
But basically, charge from my website.
Yeah, right. Yeah, it's all over. It's everywhere, right? And so, basically rabbits mating, he figured out this, 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 144. I'll keep going. But basically, this sequence of numbers, when you divide the previous number or the number into this previous number, you're going to get the golden mean, right? You're going to get 1.618. And the larger the number, the tighter and the tighter and the tighter you can get to it.
So let's just explain. Let me see if I can explain it to folks who might be new to Fibonacci. Some of you are familiar, no big deal. But if you're not familiar with Fibonacci, it's a sequence, right? So, as the story goes, there was a math problem, which was basically, if a particular set of rabbits, right, were to double starting with the second month, right, and go into production, how many pairs of rabbits would there be at the end of 12 months? The answer is 144. But it's not so much the answer 144, more so what the sequence of pairs of rabbits are over those 12 months, which at the beginning you have one pair, right, as you're told. Yep. And then they don't go into production until the second month. So then in the second month, there's still only one pair. So the first two numbers are 1 and 1. And then so the following month, they're in production. So now there's a second pair. So now you're going 1, 1, 2. Now you have two pairs of rabbits. Now going into the next month, you have one pair of rabbits that's already in production and another pair of rabbits that is not yet in production because they only get into production in the second month. So then you go 1, 1, 2. Now you have three pairs of rabbits because one pair mated, the other one did not. And now moving into the next one, now you have two pairs of rabbits that are mating, one pair that is not. And so the next month you have five pairs of rabbits. So 1, 1, 2, 3, 5, 8, right? And so on and so on and so on. And that number goes on to forever. So if you take any of those numbers in that sequence and you divide it by the one next to it, you're going to get the golden ratio. How did I do there, Bart?
Bingo. You nailed it.
That's pretty good,
right?
Almost like I've told the story before sometimes.
Yeah, you might have it memorized.
So then, okay, so then great. So 1.618 golden ratio.
So
what? So what? So what does that number mean? What are all these pictures and colors? These are lovely things. A fetus, snail,
everything, right? What we're trying to show here is the golden ratio, the golden mean. It's everywhere in this third dimension. And why? So if it's everywhere, it's got to be in the market. Well, what we're also showing here, if you look at each one of these pictures, it's also showing growth, right? And so what happens is the natural sequence of growth, and there's always got to be an opposite to everything here, right? For every action, there's an equal and opposite reaction here in this third dimension. There's going to be retracement. So things that grow and retrace, kind of sounds like the market, are going to behave according to the golden ratio. It's that simple, yet that kind of hard to get your arms around it. Like, really? So what I decided to do was just show examples. You can use Fibonacci to project, grow. You can use Fibonacci to retrace, right? That growth that occurred, it'll come back, and invariably it'll be some fractal, doesn't have to be exact, but it'll be some fractal of the golden ratio.
Let me ask you this: all these buildings, all these ancient Greek, buildings and everything like that, using the golden ratio. There's like a visual aspect to it, like humans, find beauty in these patterns. Like, right? Is it something like that? You're the expert.
100%. Yeah, 100%. So that is a subset, or I say Fibonacci is a subset of sacred geometry, but that's sacred geometry. And they call it sacred, not from the perspective of a religion, but they're saying it's sacred because what they saw was these patterns everywhere. So if they're going to create something, if they're going to build the Parthenon or the pyramids, right, whatever they're going to build, they're going to make it harmonic to these ratios, so it will be pleasing to the eye. And
what makes the location of the Egyptian pyramids and what makes that so special?
Well, I'll just give you one. Yeah, there's many.
Oh, it's like that, huh?
But it's the Giza complex is located in the center landmass of the Earth.
So what does that mean, center landmass of the Earth?
It means if you just laid the Earth out in a two-dimensional map and went to go to the center landmass of where it is, that's the Giza complex. Kind of trippy. Gets even more trippy. The latitude of the Great Pyramid of Giza is exactly equal to the speed of light, undeniable, to 3 decimal points. So my question is, if these things are 10,000, 5,000, 15,000 years old, when did we map latitude and longitude? I'll just leave it at that, right? So, and Fibonacci, the golden mean is all over. In fact, the Giza complex, if you connect the 3 pyramids, it makes the Fibonacci spiral, which is pretty amazing. And people have gone and found artifacts at the end of it in Egypt. We'll have to do that one day, JC. Maybe we'll go to the pyramids together.
I think we should
call some charts up. Call some charts up.
No, I like that. And then what about Sedona? What's going on there?
Well, Sedona is a key ley line. Okay, so
what does that mean?
There's different energies throughout the Earth, right? It's an electric Earth. It's magnetic. And so throughout the Earth, what we have these different ley lines where the magnetic resonance is much more pronounced than it is, let's say, in San Diego, right? So Mount Shasta, the Giza complex, Sedona.
What's Mount Shasta?
Mount Shasta is in Northern California, and that's a major ley line in magnetic resonance area.
Really?
Yeah. So all of these ley lines, when you start looking at it and you start looking at where a lot of these pyramid complexes and everything were, they were on these key ley lines.
So, I mean, it's undeniable that you see things in these patterns, right? And these patterns are vibrations, essentially, is what you describe them as. Help me piece together. I mean, I'm dumb when it comes to all this stuff. So help me put together, okay, so I understand the math, right? The Fibonacci sequence, you divide any number in the sequence, you get the 1.618. I get it. You know, you see it everywhere. You see it in hurricane patterns. You see it in our own DNA, our own structure, the size of our fingers, all that stuff. I get that. I get the energy in certain areas. You know, and clearly, you know, this is ancient mathematics that, you know, has not changed because math doesn't change. I get that.
It's natural law. Yeah.
Now, help me wrap my head around, you know, why those numbers can potentially, you know, help us make money in the market at the end of the day, which is what we're trying to do. Like these vibrations, that's kind of like what I guess I'm not understanding. The vibrations that you describe, the ups and downs, the ebbs and flows that we see in waves on Earth, right? Like literal waves in the beach, right? You're the surfer. You know, those waves can be seen in the market. How do the vibrations apply to that? Is that human behavior, or is that what? How does that impact that?
It's all that, right? You said a couple things. The most important thing that you said it 3 times, was patterns. Our brains are pattern matching quantum computers. So these patterns are created via the Fibonacci sequence in sacred geometry. And so, you know, Nikola Tesla, everything is vibration. So everything is vibration. And depending on that vibration, it'll take those atoms, protons, neutrons, and remember Wonder Twin powers? I might be dating myself, JC, but Wonder Twin powers activate, form of a sailboat or something. You know, when you have these vibrations, they're going to form that pattern that's in their DNA. So when we start looking at the market, right, everything is vibration. We also have to include a little bit of music. And oh, by the way, like Tool, I love Tool. A mass majority of their music's based on Fibonacci sequence.
Is that true?
Yeah, look it up. It's amazing. A lot of the way they use their words. They'll say one word, then they'll use 2 words, then they'll use 3 words. Yeah.
Oh,
Tool. These guys are.
I didn't know that. I didn't know that.
Tool is awesome, but you'll find it in Beethoven. I mean, it's everywhere, right? Why? Because that vibration's pleasing to the ear. So
also, it's not just a visual pleasing in the architecture, but also to the ear as well.
Bingo. It's everything.
Wow.
Yeah. So when you look at it, when you're going to start talking a little bit about music, you'll start saying, okay, well, then you have to get into square roots and their inverses. I'm not going to go too deep into musical theory, but the frequency of a string, right, all vibrations, is equal to the square root of its length, or 1 over the square root of its tension. So when you start looking at some of the numbers, like everyone will say 0.786 Fibonacci number. Not really. 1.618, square root of that is 1.27, and then 1 over 1.27 equals 0.786. That's where that number comes from. So is it a Fibonacci number? Not technically, but it's derived.
A Fibonacci derivative.
Right, it's derived from it, right? So that's when you start going, wow, is this stuff really everywhere? Well, like Yeshua says, even the very hairs on your head are numbered. That's Luke chapter 12, verse 7. I'm not a Bible bumper, but I look at it. Well, 12/7 is 127, which is the square root of 1.618. Do you think that's done on purpose? Come on. Like Exodus 3.14, Exodus chapter 3, verse 14. I am. Well, pi. I'm pi, right? So these numbers are everywhere. So when you start looking at the market like we're looking now, just realize that everything is vibration and everything is in a constant state of what? Growing and retracing, right? We are doing that mentally. We're doing it physically, right? I know I need to retrace a little bit, lose about 10 pounds. It's happening all the time, right?
Nice.
So what we want to do when we start using Fibonacci in the market is we need a key node. This is an unbelievable chart, and it's not me. It's just I've done the work. The all-time low on the Dow was $28.48 on 8/8/1896. And if you look at the bottom of that chart, there's 28.48.
What were you doing that day, Bart?
Me? I don't know. I was probably a grain farmer back then. I'm not sure. But so every major, I don't want to say crash or pullback, right? But every major one has been completely 100% associated with $28.48. If you start from the left and you go to the right, the left, 382, that was the 1987 crash. Nailed it exactly. You go to the 2000 crump, bam. Nails it exactly. 382, 2003 low. 2009 low when stuff was getting crazy. Well, that's a 50%. Okay, I'll give it to you. But if you take the 1987 low, it's exact 0.618 retracement. If you take the crash that occurred in COVID, exact 382 retracement. It's everywhere, right? So this little pullback we have going on right now, is it a huge one? I don't know, but I guess I can tell you what, I have 28.48 lined up what the 382 is.
So tell me what that means. 28.48.
Yeah, so $28.48 is the key node for the Dow Jones Industrial.
Right, I get that part.
Price. So you'll start when you have a big correction, one that's like, okay, we're going to correct 10 to 15%. So what? We need it. You want to go and use that $28.48 as your key node to do your retracement grids. That has been the pivot since the 1898 or 1896.
So then what? Give us some key levels here on the Dow then.
Okay, I haven't done it in my head, but I can. But we have a key level, and that's the all-time high now. So using that $28.48, now you can see I projected from the 2009 low, and it exactly hit a 1.618 price rejection in the COVID crash. Look at that. Exact. Yep. So that tells me we have a key node here. So now I project from there. So I go from 28.48 up to that 1.618 price rejection. And then I project it again. That was the exact all-time high in the Dow so far.
Last week.
Last week.
Well, yeah. In the week of the week of November the 13th, 14th, whatever that high was.
Yeah. Now, just as important, and it doesn't have anything to do with Fibonacci, if we go back and we start looking at this whole concept of square out price and time, not many people realize that the inception date of the Dow, May 26th, that was 47,274 calendar days ago from October 31st. So not only were we hitting these projections, we were also squaring out price and time, which means from that low, travel in time, 47,274 calendar days, then go up 47,274, and we squared out that. So this little pullback that we're having right now totally makes sense. But using Fibonacci, you can project where these markets can go, and you can project, you can see where they can retrace. Check it out, JC.
And then what's the next big level moving forward? And then we'll move on.
Probably a 127 extension. I haven't done it yet, but I'll probably do a 1.27 square root of 1.618, and then I'll do a 1.618 price projection. It could get up there, but right now let's just see how far we can go down. But the other thing too is look at the 0.618 price projection that I used. It was the exact support on that last big pullback when Trump said that China tariffs or something.
Yeah. That was that former resistance from the prior cycle.
That's right. But how many people know that a 0.618 price projection from 1896 was, look at that candle, was the exact. So as you're using these 0.618 price projections, equality, AB equals CD,
sure,
and 1.618 price projections, if they get run over, make sure you remember where they were, because they are great magnets for future trades.
Right. So So it doesn't have to be resistance on the way up. It can be support on the way down.
Bingo. Okay.
Yep. I've learned that one over the years. All right. So talk to me about this. We're looking at micro strategies, MSTR, long-term chart going back to the 2000.
Yep. Exact 1.618 extension from the 2000 high. Now I'm bummed because you know me, JC. I like to do real-time charts. I couldn't find it. I do have it somewhere. I couldn't find it last night, but just trust me. I was like, oh wow, this is topping. But it hit it exactly. Isn't that nuts? And so we got to ask ourselves, what is happening to the overall consciousness?
So the high from 2000 down to the low, right? It took 25 years or whatever, 20 something years to get back to those former highs from 2000.
Yep.
Right. That is 100% retracement.
Correct.
And then 161.8% retracement would be another 61.8 to the upside. Correct. That was exactly the high.
Yeah. And you're making a good point. These are what we call extensions. So from that old 2000 high, like you said, once you go up to that, you've now retraced 100% of it. Once you go through it, you're now extending off of that high. So all we did was just extend it at 1.618 25 years later. Hit it exactly.
All right, talk to me here. This one is
This is Wachovia. This goes back to when we were doing CMT. And the reason I did
well,
it
for
is
those who don't know, Bartelloni was my CMT level 3
yeah,
professor. Is that right? Yeah, the
yeah.
CMT Association used to have this thing called the CMT Institute,
I loved it,
where,
man.
young bucks like myself just trying to learn a thing or two. We had to take these CMT exams. There's 3 of them: level 1, level 2, level 3. And back then they would have some CMTs that would help us. You could sign up for these things, and so I needed all the help I could get. And
We all
and
did.
lo and behold, a one James Bartelloni is there teaching me about momentum divergences and whatnot. And then next thing we know, we're talking about projections and retracements and all kinds of stuff. So it's
16
awesome.
years later, JC. It's been a great
Yeah, how
friendship.
long?
Yeah, yeah. It was
16
08,
years, dude. What the
08.
hell?
I probably
But the
met you in
reason I
oh
put this
07.
one up here, number one, it is the exact high on Wachovia. My buddy was an investment banker for him, JC. I go, hey, dude, you might want to cash in your stock options. It's not going above 60. He's like, what are you talking about? I'm like, I don't know, dude, but you got an A, B, C, D. But the reason I put this one up here is look at time, JC. The time is exactly 89 months, which is a Fibonacci.
So then tell me a little bit about that. So, you're combining the time with price, right? So I get the extensions, the retracements, the projections. I get that, right? I'm doing that myself. That makes sense. Some of the science behind that and the music and the vibrations, now you're adding alpha there, because that's just not stuff that I know. I don't know anything about music, right?
I didn't either, but now I do.
I listen to 90s hip hop. What do I know about music, right? And then but there's the time element. And I got to tell you, I always think about this. Sometimes people ask me, but like I like to, kind of be, hard on myself. And I like to think about, what I'm the weakest at. What is it that I, just, I understand technical analysis. I don't understand a lot of markets, and I focus on the things that make the most sense to me. But, there's one area that I know for a fact could help me, that I don't apply, and I assure you it can help me, and that is the timing aspect of things.
Yeah.
The cycle work that I do, the projections in time, the extensions in time, that's somewhere where I'm weak. So why don't you help me out here, Bart, and explain to me how to think about the cycles in terms of time, not just in amplitude, but in duration.
Yeah. Great point. And quite frankly, JC, time is the golden goose, right? You've seen
I guess
it.
I don't have the golden goose.
Yeah, I don't have it either. I'm figuring it out. You can see I can come up with some pretty powerful price inflection points. And it might be some resistance, might be some support, or it might be the resistance or the support. What invariably causes it to not hold or be the level that it should pivot at is time, right? It's too early, or perhaps I was too late. And so with Fibonacci, these are just basic time cycles. When you start looking at the planets, I'll just say the planets, right? It says in the Bible, God put the planets in the air so we could tell time, period. A significant amount of those relationships are Fibonacci based, like the Venus and Earth cycle is 0.618. It's perfect, right? So we can use the Fibonacci time cycles. Again, they're not going to be perfect one for one. In this case, it is, because the price projection is matching up. That's the key, right? But it could be 127 or 1.618 of time. Why? Because it's variable. It moves in and out. And there's a lot of different factors. There's conversion factors. There's calendar day time. There's planetary time. There's actually frequency time, right? Where you can figure out the periodicity of it. So time, you have to put all that into one thing. But once you do figure out the time, then that time should work for forever. And so as we look at time, Fibonacci time, just work on the basic static cycles. But here's the key is trust your eyes. If you go back to that Wachovia chart, you don't have to, but people watch it later, you can see that it's harmonic. It's like, wow, that looks too perfect. Well, it's because your eyes are seeing it, right? And that's the Fibonacci sequence. That's beauty. That's why when, no kidding, when people go to plastic surgeons, they're using Fibonacci to figure out how they're going to cut your face up or give you new boobs or something. It's all around that, okay? So that's kind of with time. What I'm doing is I'm working, with an active inference AI to do time. to do it based on the IPO. IPO is that when you take your first breath, if you will, right? And then that first pullback on a tick chart, minute chart, hourly chart, that is the cycle.
Yep.
And then they just start.
Now that I do. Now that for sure.
Yeah.
Yeah.
But
Facebook, had its thing, right? Like all these IPOs, they have their things and you project from there 100%.
Yeah, it works. And it starts the cycle, right? So as you start looking at time, one of the things is, like I was telling you, everyone, when they first start out, draws a 0.618 retracement, gets smoked, and this doesn't work. But then the next day they come up and they draw it and it works. And they're like, what the heck? They're not seeing that as part of an overall pattern, right? And so you got to project, you got to extend. And sometimes it might be 0.618. Other times it could be 0.707. 2, square root of 2, 1.412, 1 over 0.707. So you got to put the whole piece of it together. And that's why time is such an illusion, because there's more.
That's why I wanted you to explain this.
So this is very interesting. This is the XLF. So I was working for a group called One to Trade Group back then in 2009. And I put this up here because if you remember, I know you do, some of the listeners might not, but in March of 2009, the world was ending. Right.
I remember it well.
Right. And so all of a sudden across Reuters came, buy the banks. And all it was a pattern. So pay attention to the middle there, and it's a 1.618. So if you look at the bottom right, there's the 1.618 extension. And then as we look at some time,
that's the low, that's the 0203 low, right?
That's correct.
And then this is the rally. This is the 0203 low after the dot-com bubble crash. And then the rally into the 07 highs. This is where the stock market peaked. And then this is the great financial crisis.
That's right. And so XLF did a precise exact 1.618 extension. Now, all this other stuff, that's some of the geometry. But as we look for time, I started, and the sun is a big deal for the financials. I'll just leave it at that. But I started at that key node of where that 2003 low. And so I just moved the sun, and I moved it basically 640 degrees.
Hold on. But what do you mean the sun?
JC, we could talk for hours about this.
No, I know, but talk to me like I'm a fifth grader. So the sun is 2002 lows?
I took the position of the sun in the 2002 lows, and I moved it to March of 2009. And what I saw was a price and a degrees traveled, which is equal to time, synergies. So we were coming into the 1.618 extension at about 630, 630. Price extension. At the same time, we had the sun traveling exactly 637 degrees. That's a price and time confluence. And then I had some geometry.
Why the sun, though? Why not like Mercury or Mars?
A great question. Again, we could talk for hours. A lot of it has to do with the inception date of the XLF and what.
When was it conceived?
It was like 2002.
And then the sun, where the sun was then, is a all right.
Rulership, stuff like that. I'll just leave it at that. Right.
All right. I like it, Bartelloni. So you're coming out there. Everybody thinks the world's coming to an end. I remember it well. This is March the 3rd. The market bottom like a couple days later.
Yeah, 2 days later.
Yeah, 2 days later.
The guy, Tim Bessler's his name. He was getting hate mail from people. How could someone put this out? I'm like, dude, look, it's a pattern. I don't know.
Yeah. And that was the ultimate low. I remember it well. How old was I then? Well, we knew each other already.
Yeah, it was happening.
Yeah, we already knew each other by then.
Yeah,
wow, that's crazy.
There's the extension. I did this one for copper. Again, a lot of times we're using, throw up the retracement grid, but sometimes we can use ratios. And so this is an example of an expanded flat. It's perfect. Expanded flat.
All right, tell me what an expanded flat. This reminds me of the old Elliott wave principle. Am I? Is that right?
And just so you know, JC, if I start doing this in my golf game, if we ever go golf together on a par 5, and I say, give me a 6, I probably got a 9. So with my counting, if I go one subwave below the other one, I'm probably wrong. But I'll give it a shot. Connie Brown told me, she yelled at me, do not ever count a wave again. You're wave deaf. I was like, maybe that's why I became a surfer. I don't know. But anyway, one of the corrections, if you're going to study Elliott waves, just learn the corrections. They help.
Yeah.
Other than that, subwaves of the subwaves, it's crazy. But this is an expanded flat correction. And the key with it is the B wave goes above where the A wave started. So as you can see on the chart, A went down, but the other key is it's a three-wave move to a new high, and then it stops. Lick your chops, because it's going to be one of the greatest buys ever. That's a perfect expanded flat. So I took the A wave, and then I basically just said 1.618 of that, because that's a relationship in Elliott wave. It's not a rule, it's a guideline that a lot of times the C wave down is equal to 1.618 the A wave in an expanded flat correction. That lands exactly on the 786 retracement. So if you look to the left, the A wave is the blue arrow. All I did was make 1.618 of it, make it the orange arrow, copy paste, landed right on the 786. That was the low. Copper went to new highs. Powerful stuff. I made some money on that. But again, that's Fibonacci, right? So we've used Fibonacci retracements, find the right node. We use Fibonacci in time. We've used Fibonacci projections. And now we're using Fibonacci's in the relationships of the waves. It's really perfect.
You know, this goes back to Charlie Dow stuff where you got your primary, primary trends and your secondary trends, and then you got your, they call them minor trends. They're kind of like the ripples and the waves.
Yeah.
That was a long time ago, right? That was at
Still works.
Edward. Yeah, that was a long time ago, and it's still exactly the same. So really, really fascinating stuff. I really like how you're talking about the Dow Jones Industrial Average, MicroStrategy, the stock, Wachovia, the stock. XLF, an ETF. Here we're talking about copper futures. Now your next chart here, you're talking about the US dollar. So you're really applying these across the board. Bartelloni likes to be known as an intermarket musician.
Yeah.
That's his favorite, intermarket musician. I'm not making this up, folks. Do I have that right, Bart?
Yeah, man. Let's play some tunes. Hey, JC, I don't want to get people confused. Hopefully they'll watch it, but that high on the dollar to the far right, exact 1.618 price projection. Exactly.
The high on the dollar.
That high, yeah. And then look at the time. It's the same time, same rally. And then just follow the green, purple, blue down to the right, green, purple, blue. It's exact in price and time. So if you just take all your moving averages, Bollinger Bands, whatever.
What you're saying is that these lows down here were the same as these lows down here.
Yeah, it was exact.
And the projection is the same too.
Yeah. In fact, the high ended up being the purple.
Why don't you be the historian here and explain to the folks what the Plaza Accord is?
Plaza Accord was when basically 1972. Why did I put 1985? Oh, that's the was it 1985? I think I got that wrong. But basically we got off the gold standard. And
I believe that was 72.
I'm pretty sure it's 72. I don't know why I have 85 up there. And I got the other thing wrong too. 1647 is actually 164.72. That was the all-time high. But I'm showing again dollar index. This one will blow people's mind. Yeah, do this next one. So, okay, Bart. Okay, here's inflation since 1915. The first low in inflation was a.
And this is according to what? Is this a?
This is
how are you defining inflation?
This is TradingView U.S. inflation rate.
God, okay.
Since 1915, so over 100 years. So it spikes in 1915, crashes down. It does what? An exact 1.618 extension. Smashing goes high, does all those waves, retraces, does what? 0.618 retracement. Rallies, what's it do? 0.786 retracement. Bangs around, there's the extension off of those lows. And then where are we now? Well, JC, we got a 0.618 and a 786 on top of each other. Inflation's going up.
You think inflation's going up? Because
I don't know.
Well, let me ask you this: you're talking about multiple retracements and whatnot. Kind of like a confluence of them here. Would you argue that when that occurs, it makes the levels even more important?
Exactly, and especially 618, 786. You trade that all day long.
So inflation.
Right, JC, right? We don't know what the Fed's doing, what the CPI, PPI, I think I got that.
Sure as hell don't.
But here it is bouncing around. And look at this one, dude. So do you remember? They're raising rates. And I told a buddy, I go, they're going to cut them. Wow, blah, blah. He goes, why do you say that? I go, because it's at the 786 retracement. Yep. So think of all the insanity the Fed's doing this, and I read this, and blah blah. It just did a freaking retracement. And oh, by the way, from the left there in 1982, if you look at 2003 low, it was a 1.6% extension
of this entire rally.
Yeah, yeah.
And then over here,
over there, it just bottomed out. I actually was doing a projection. I'm like, wow, we might go to ZERP. But it never did. So there's interest rates, the Fed, Trump. I'm like, it's just bouncing around the Fibonacci retracements and support. It's crazy. But that's how we project reality. We project reality through vibrations, through understanding harmony, music. We don't like dissonance. And take your time. Don't just do a retracement. Project where it's going to go, extend where it's going to go, and then retrace it. Look for some structure, maybe some polarity. Throw an RSI on there, a little divergence. Let it rip. Throw a measured move on there because it likes to do the same thing over and over and over again. If you really want the big pivots, then you wait for the monthly measured moves. If you're a day trader, you get in there, you figure out the hourly harmonic. But it will be a harmonic to all the stuff we're looking at. And that's Fibonacci Day, brother.
Fibonacci Day, November the 23rd. Don't you forget it. Mr. Bartelloni, where can people learn more about Fibonacci? They see this video, man. They get all excited. What would be the next step for everybody?
First thing is there's a book called by Michael Schneider. And it's basically how to create the universe, a journey through the numbers 1 through 12. That's awesome. You can see here to the bottom right, this guy, joedubs.com. I love his stuff. In fact, he has an entire library of pictures like this, sacred child. I mean, it's really incredible what he's done, and it's awesome. Google it, right? And then pick up any technical analysis books. I would recommend Connie's book on Fibonacci because she gets into
Connie Brown, Constance Brown.
Yeah, Constance Brown. She gets into really some unique areas of looking at what the market's telling you and where to do your grids. You don't always do it from the low, right? You do it from gaps. You do it from like little support areas. There's art to it. It's not totally objective, but
so you're talking about Michael Schneider, A Beginner's Guide to Constructing the Universe, the Mathematical Archetypes of Nature, Art, and Science.
That's it. Yep.
That's the one.
And then if you really want to apply it to markets, go check out Larry Pesavento's book, Pattern Recognition with Fibonacci Ratios. That should be a Bible in any technician's book.
Yeah.
And then I'm at bartscharts.com and I do no fundamentals. It's all projections. It's all, yeah.
Ladies and gentlemen, you heard it from the horse's mouth, Mr. James Bartelloni. Barts Charts, the man, the myth, the legend. You go out there, you celebrate Fibonacci Day. It's a celebration. Go enjoy yourselves.
I'm going to go surf.
Have a ribeye and a Bordeaux. That's how I celebrate.
I'm going to surf.
All right. Well,
Thanks,
different
JC.
strokes for different folks, right? All right, guys. Thank you so much, Bart. You're the man.
You are too, JC. Keep it up.
And thank you, everybody, for being here. I'm JC Parets, and I'll catch you on the next one. Adios.